Now, the Philippine economy looks strong on paper, with growth holding up, inflation easing, and fiscal numbers steady. But that resilience is being tested as the 100 billion peso flood control scandal dominates headlines and protests rattle investor confidence. And these are not isolated incidents. Corruption cuts across administrations, with multiple lawmakers in both the Senate and the House now implicated, even forcing leadership shakeups. To help us break down the real economic costs of corruption to government, business, jobs, and investor trust, we're joined by Alex Escucha, the chairman of the UP Visayas Foundation and fellow at the Foundation for Economic Freedom. Hi, Alex. Good to have you this morning.
Good morning, Mikey. Thank you for having me.
Okay, Alex, these are not isolated incidents. We're talking about corruption here. Analysts say that flood control corruption is just the tip of the iceberg as it cuts across administrations, with lawmakers from both chambers now implicated. How endemic would you say is corruption in the Philippines today, Alex?
Well, as we knew all the while that it is endemic, but the extent of it, uh, we thought it was just a flood, but actually it's now a deluge that covers all layers of the government.
Yeah.
And it is really a major economic cost. And I think we have slides to show that the total spending on infrastructure averages 1.5 trillion from 2023 to 2028, which is almost exactly the amount of deficit, which is also the amount of additional borrowing that the government has to do.
Yeah, that's right. Now we're being flooded with all of the corruption allegations. Alex, what would you say is the cost, the economic cost of this systemic corruption?
We can break it down into several layers. The first direct impact is that one, economists use the term capital to output ratio. For every 1 million peso that you invest in capital, you're supposed to get a multiplier effect out of that. But if the spending is ghost, your output is zero. And if you go back to the 1.5 trillion infrastructure project in the Philippine Development Plan and in the fiscal framework, if we say 50% of that is lost, then that 1.5 trillion represents 5.5 to 6% of GDP during the Duterte and BBM administrations. When I was traveling in Hong Kong, Singapore, and Tokyo for investor relations meetings, the analysts were saying that the spending on infrastructure during Pinoy and GMA time was 1.1 to 2% of GDP, which was criminally low. However, it was increased to 5 to 6% in Duterte and BBM administrations. But since practically half of it is lost anyway, then the net effect really is basically just 3%, not that much of an improvement over the previous administrations.
Yeah.
This explains in big part why, despite all of that spending and the fact that the biggest increase in the debt stock is happened during the Duterte and BBM administrations, we did not see any acceleration in the GDP growth.
Yeah, correct. We see corruption in overpriced contracts, in poor quality things, and in most extreme cases, in ghost projects. And as you pointed out, infrastructure is huge and it matters. If done right, it has a huge multiplier effect because it improves our capacity to grow. In fast-growing economies, infrastructure spend to GDP, that should be 7 to 8%. In the Philippines, we're short of that at 5 to 6%, which, as you mentioned, is criminally low. Add to that, because of corruption, if that's reduced to half, that's just 2 to 3% of GDP, barely enough to move the needle. Is this why, Alex, we record gains on paper, but people aren't feeling it on the streets?
Well, we should have been growing faster than we should because, for example, in 2020, our GDP dropped by 9.5% and 19.5% in the second quarter alone, the quarter of the lockdown. During that same year, Vietnam did not slow down. It even overtook us in terms of per capita income and has continuously leaving us behind. So I take it with a grain of salt. Any statement that says, "Oh, we are still one of the fastest growing economies in the region," because I would always ask, in relation to what? In relation to what we should be growing according to the goals of Ambition 2040, we should be growing by 8 to 10%. And even Secretary R.C. Balisacan has issued a statement about 2 weeks ago that that is no longer possible.
Yeah. Beyond the pesos lost to corruption, Alex, how does it ripple into the broader economy? Can you explain to us how it hits us through higher borrowing costs, weak investor sentiment, and in all the lost opportunities?
Well, let's break it down in terms of the layers of economic cost. One is that uh, the uh, there is no bang for the same buck. It used to be that kung kupit-kupit lang, then there is still an output but less. But now we're talking of zero output in terms of the ghost projects. Number two, it displaces remember there was a reallocation for 3 budget years from the flagship infrastructure projects to unprogrammed appropriations. So while you take away the domestic funding for that, we have to pay commitment fees to the foreign funders which had committed to these projects. Number three, the 245 billion for the for flood control projects alone in the 2025 budget would have addressed the 10 to 15-year backlog of classrooms, according to Secretary Angara, who at the House Appropriations Committee hearing said the backlog is 165,000 classrooms, and yet they're given only no more than 10 billion a year. It will take them 15 years to address that backlog.
Yeah, there's
Then number four, we have to borrow. But the fifth item is that we have to pay interest. The budget would have to include a higher portion of higher amount of interest to be paid on that debt. But if the infrastructure project was being spent properly, the amount of borrowing would only be one half. Mm.
Yeah, we're borrowing without the growth payoff. You mentioned debt, Alex. Our national debt is now at 21.9 trillion, with 9.1 trillion added during the Marcos administration, 6.8 trillion under Duterte. Looking back at the debt to GDP ratio, that was as high as 74% under Gloria Macapagal Arroyo. It went down to 39%, a low 39% in December of 2018. Then it spiked during the pandemic for obvious reasons. Today we're stuck at around 60% debt to GDP ratio. Borrowing at this level would have been acceptable if it were driving growth, but it isn't. How damaging is this, Alex, for our fiscal credibility, and how worried should we be that our debt is rising without the dividend payoff?
Well, the opportunity cost is this. The 5-year development plan and the 5-year fiscal framework prepared by the economic managers at the start of this administration forecast that the debt to GDP ratio will drop from 61% to 51% of GDP. That's a 10 percentage point decline. But because number one, the GDP is not growing as fast as it should, all the tax measures actually from the create more, the train, and even the last CEMEPA were actually revenue neutral. In fact, the last CEMEPA was negative in terms of revenue impact. The only thing that made it positive is because they removed the tax exemption on pickup trucks.
Yeah.
Otherwise, it would have been negative, no?
Yeah.
So when we say fiscal consolidation, the real action that needs to happen is on making sure that the spending is efficient and effective. But as we can see, we there is no it's like we're leaking at all the seams. No? Lahat may butas eh. So
Yeah.
that's the problem.
That's right. Let's take a look at those figures again. The debt stock by administration. Let's pull that up. We had that on a while ago. When you take a look at these figures, Alex, What does it tell you, this debt picture? It varies. It tells very different stories across the different administrations. What does it tell you, Alex?
Well, I wrote an article about it in Business World that giving 25 year at least a 20-year horizon from the time it does that because absolute amount looking at the absolute amount or increases is not meaningful per se. You have to put it in relation to the size of the economy or the capacity to pay. So it was as high as 74% in GMA's time, and that's when the VAT was increased from 10 to 12%. And then the debt to GDP ratio continuously improved the rest of GMA. In fact, during Pinoy's time, we got our investment grade sovereign credit rating and continued on in the Duterte time. And even with the current deficits and the levels of debt, the debt to GDP ratio should is still at the 60% level. I don't agree that there's a international limit of 70%. It's relative to the economy. In Singapore, the debt to GDP ratio is 150%. In Japan, it's almost 200%. In the US, more than 150%. So it has to be in the context of all the other things in relation to the economy and how the debt is managed. For example, 80% of the debt is long term, meaning more than 5 years. 80% of the debt is local currency. In Japan, they don't worry about 200% debt to GDP ratio because everything is in yen. So they're just indebted to their own citizens.
Yeah.
So these are part of the considerations, but to me, the real problem is the bang for the buck issue.
Yeah.
We are hemorrhaging. In other words, like in all our orifices, we are hemorrhaging money like nothing.
Yeah, it's a big concern, Alex. Our debt to GDP ratio now at 60%. As you mentioned, it's got to be taken in the context of the Philippines. In the context of the Philippines, the medium-term fiscal framework projects a decline to 51% by 2028. But with the leakages, is this path possible? And where are we when it comes to fiscal consolidation?
That is why at the House Appropriations, at the Senate Appropriations Committee, I mean the Finance Committee chaired by Sherwin Gatchalian, that chart that shows the original forecast from 61 to 51%, but instead will just be steady at 60%, was actually a slide by Senator Sherwin Gatchalian, not from Secretary Recto, meaning Congress, the Senate, realizes that because of all these issues facing us, uh, it will not worsen beyond the 60% level, but it is not going to improve to 51% as originally hoped or projected.
Alex, talking about that double whammy, we're borrowing the same amount as we're spending on infrastructure. If the leakages were cut, our borrowings could have been cut in half. How do you quantify the long-term drag of this cycle?
Well, economists would have there's a sort of a leading indicator and a lagging indicator. The leading indicator is the amount of, just like in business, you have capex. That's why you borrow. Companies are willing to borrow to expand capacity, expand their plants, so they produce more and earn more, and from of the incremental earnings, they're able to pay their loans to the financial system and still make money for their stockholders. In the same manner, the government, from a macroeconomic point of view, investing in infrastructure. But if you're talking of bridges, roads, especially roads where it connects productive areas so the market goods can be produced, can be marketed properly, that has a positive incremental impact. But flood control is just a zero to negative impact because you're just trying to control losses. I don't really see any that much, as analysts would say, additive value. But now we're even seeing negative value because It's we have a lot. Even Secretary Vince Dizon was so stupefied that to learn that while there are master plans for certain river systems, the insertions are funding projects that have no relation at all to any master plan
Yeah.
or no feasibility studies. These were really just designed to be stolen or wasted.
Yeah, that's a thing. So Alex, stepping back, looking at the broader picture, how does this hurt the Philippine investment story? For foreign investors, credit rating agencies, how damaging are these, are these series of corruption allegations to the Philippine investment story?
From the macro, I think our starting point is that uh, people tend to forget that we still have the investment grade rating from Moody's, Standard and
Yeah,
Poor's,
big
and Fitch.
three.
I had experience in talking to all three in my corporate job. Uh, the first thing that you would hear if they see any deterioration in the what they call the dashboard or the heat index of parameters is to warn about a possible downgrade of the outlook, not yet the rating, from say from positive to
Right.
or
There's
from
that
stable
indication. There's that
from
indication,
stable to
Muna.
negative. But in fact, they actually the last action was actually from stable to positive. No, so that to me is a bottom line. Definitely, it is a concern, but there are two types of investors. If there are investors who are just looking from afar, remember in the whole scheme of global investments, the Philippines is basically a rounding error in the portfolio of the biggest investors. So they easily would pass by us. And that is why the stock exchange index has really not moved for the last number of years. But for those portfolio investors, part one, part two, the real foreign direct investors who have been here, who have been present here, a good number of them still continue to see opportunities. They know the strengths and weaknesses of the Philippine economy, that we still have a good, productive, young workforce. And we have a one of the fastest growing populations,
Yeah.
and that is therefore a big consumption market. Remember, on the demand side, our economy is like the US, 70% consumption.
Yeah. Alex, the Philippines remains investment grade. The big three have an investment grade rating on us, the big three rating agencies. Yet foreign investment inflows lag behind our ASEAN peers. How much of this gap is corruption driven versus structural issues like energy costs and logistics?
Excellent question, Mikey. The question is, even before these corruption issues came up, because there's always a certain level of corruption in every country naman eh. But in the Foundation for Economic Freedom, we are part of a group that monitors the index of economic freedom across the world. And the Philippines ranks very well in the monetary financial management. But where we rank low is in, halimbawa, the ease of doing business, getting permits, enforcement of contracts. It takes forever to settle disputes. Uh, and we have a fellow who is advising investors across Southeast Asia. It takes only 30 days to get a major investment application approved in Vietnam. And in the Philippines, it takes a lot of time. So, with or without corruption, for many investors, that is the real issue on the ground. And that is where we need a lot of improvement.
Yeah, there's speaking of improvements. You're an economist, but you're also a Filipino. Alex, how do we protect ourselves from the worst of ourselves when we talk about corruption? It's so entrenched in our institutions, but how do we break this cycle? I know you've got a list of recommended accountability bills for good governance. We're going to flash that on the screen now. Can you walk us through what you think we need?
Well, to me, at the end of the day, regardless of what happens to the investigations, you recall that every presidential term had their own presidential anti-graft or anti-corruption commission, which at the end of their terms could terminate and also be changed by the next president. What I'm advocating for is really to make this whole thing institutional, just like the Independent Commission Against Corruption of Hong Kong that was established in 1974. It had real powers. Its term extends beyond the term of any chief executive. And number one, including these bills that are being flashed, is the Freedom of Information Bill that has been pending in Congress for maybe almost more than 10 years. No? Number two, uh, the best antiseptic and deterrent to corruption is light and transparency. And in the Section 11 of the Constitution, and even also in the RA 6713 Code of Conduct for ethics for public officials, they are admonished to live modest lives in the Constitution. In the RA 6713, to live simple lives. And that could be shown whether they have increased in the SALENs. Uh, but to me, one action that legal groups like the Integrated Bar of the Philippines could file a suit in the Supreme Court to reverse the what I call a stupid rule by the ombudsman to restrict access to the SALN, and Martires even criminalizes any comment on the SALN,
Yeah.
which practically neutralizes the constitutional provision of the right of the public to information on matters of public interest.
Yeah. As you mentioned, Alex, we need light and we need transparency to cleanse the system of corruption. To this end, there's an avant-garde solution being proposed. Blockchain. It's moving beyond crypto. It's already being tested in government, from tracking budget releases in real time to proposals, and the proposals of even using it in the elections. Advocates say it guarantees transparency and accountability, but there are questions that remain, of course, about trust and who really holds that. As you've been pushing for fiscal transparency, Alex, now that blockchain is being floated, do you see this as a viable solution?
Yes and no at the present time. Yes, in the sense that we have reference countries like Peru in 2018 that record and monitor purchases. In Brazil, they do online bidding. And in Estonia, where they have the national digital infrastructure. And in UAE, where they target 50% of government transactions. But 20 years ago, Mikey, I attended a conference in Orlando where Michael Hammer, the author of Reengineering the Corporation, has a very good cautionary tale. It's easy to say computerize or do blockchain. But what is important is you have to clean up your process first before you do that. Because if you don't clean up the process, it's like digitizing the quill pen or cementing the cow path. So what do I mean? We can apply already the blockchain on the procurement. But if you recall, in fact, the new development is because the insertions are no longer acceptable. 2 days ago, Secretary Pangindaman told me on the phone that when they received the budget proposal, say from DPWH, the insertions were already inserted there upon submission. So they have no way of knowing which were really the ones proposed by the DPWH and the ones that are inserted. So when a congressman said, "See, there will be no discrepancy anymore between the NEP and the GAA. Wala kaming in-insert." And because the insertion happened before the NEP was being put together. So we have to sort of look at all the process, the end-to-end process of budget preparation. So, for example, if there are master plans in the 18 river systems that we have, like the Cagayan River, the Bicol River Basin or the Pasig, Marikina, San Juan River system, if there is a vetting process at the central office of DPWH to say, even if you chop these projects, but there is a function that says how is consistent is this with the master plan for that whole river system, then you can, even if they're done by different contractors, then it can be effective as part of a bigger whole.
Yeah, there's so
So
much we
what?
need to do.
Well, Babe Singson was telling us way back in Pinoy administration, the chop amount was 50 million. Now it was increased later to 150 million, meaning that district engineers can do whatever they want without clearance from the national office. So they should review those limits again, I
Yeah,
think.
there's so much to do. There's so much to get right, because if not, it's like we're just going to be rearranging the chairs on the Titanic. Anyway, Alex,
Exactly. Mhm.
yeah, Alex Escucha, thank you so much for your time this morning.
Thank you.